How's everyone doing today? Shankar P right here. Today we're going to look at Bitcoin as well as the broader markets to see what's going on. So without further ado, let's dive right into the charts. Alright guys, so right now we're looking at Bitcoin on the weekly time frame. So if we look at Bitcoin now guys, like we've been tracking, we are still in the smart money accumulation, or the phase where people who do know about this asset class are buying into it. So now we're getting closer to the Bitcoin halving, which we have read here, which we're thinking it's going to be about April of 2024. So we are closing in on it sooner than later. All right, so I just want to bring this up guys, just so you can see Bitcoin is more predictable, and just the broader markets as a whole are more predictable than we actually think. It's just when we have live capital in the market, our emotions get involved, and it takes some time for the emotions to get beaten out of us to understand that this market's going to be here forever, and actually there's no need to rush, right? So currently guys, last week we had Changpeng Zhao, so CZ of Binance, actually got charged for, I think, laundering money. So in 2020 the same thing happened to Bittrex, when the CEO of Bittrex got criminally charged as well, and that was right before we had a run-up in price to the next previous all-time high. So we are right on schedule to actually have a run up in the price action right now. So we are just patiently stacking your crypto, stacking your Bitcoin at this moment, just so that we are riding this wave up. And like we were saying, how do we know we're in an uptrend guys? We have higher highs and higher lows. So we are on this downtrend. We had a high, a low, a lower low, a lower high, lower low, and then we made this bottom here. So now how can we tell, just from a technical perspective, that we have the opportunity to be in an uptrend? Is when the price action broke this low here. That was the first indication. Broke this high here. That was the first indication that this area right here had the potential to be the low of the market, right? So we're not predicting, we're just stacking our probabilities. We broke above this trend line here, and then we also broke above this area here, right? So that gives us the opportunity to say, hey, you know what, there's a good probability now that we're going to be heading higher. Now if we look at this candlestick right here, let me just put it in. Yeah, so this blue bullish candlestick, once we broke above with this volume, and we're on the weekly time frame, we broke above this resistance. This indicates to us that when we come down, if we come down to this support area, which was resistance, there's a high probability that the price is actually going to be supported, because there's a lot of volume that broke above this area, right? So you always want to consider that guys, is when you break above a zone or an area, or even break below with a lot of volume, there's a good chance that it's going to be maintained, right? So we saw that where we saw, okay, when we were looking at the price, when we came back down here, we said we saw this double bottom right here, and unless we broke this low on the daily time frame, so if we go back down to the daily time frame, unless we broke this low right here, we would be maybe heading down. But the fact is guys, we are on a strong uptrend, and we've broken this zone right here. So we are on a strong uptrend. Bitcoin's looking good. The S&P 500, let's look at the S&P 500 right now. S&P 500 is looking great as well. Let's go on the daily time frame. So we were on this downtrend on the daily time frame. So we had lower lows and lower highs. So we had this high here, we had this low here, and then we had this lower high, which was confirmed once we made a lower low. So once this low was broken into a lower low, this was the lower high. So we were on this downtrend until we got to this support area. So like I was saying in the previous videos, we have this significant support area, and the price could break above, or if it broke below, we would be heading lower to, which I had here, 37.9. But we are back in this uptrend. And how we determined that we were back in this uptrend is we broke above this high here. So anything below this high right here would have considered the price in a downtrend. So when the price was right here, there was nothing saying we're in an uptrend. What we could actually interpret is that we had this test, and because of this bearish engulfing candle, there's a higher probability for the price to actually maybe head further lower. So that was actually what we were looking at. But the fact that the price, we had a bullish engulfing candle to break above, we've broken above this high, so now we are on an uptrend. So what we're looking for is some sort of pullback. And whenever you get a pullback, we're looking at this area here at 45.36. We're looking at this area here at 44.43, and then we're looking at anything really above this low here, right? So the price is going to retrace at some point. So we're looking at good areas for the price to actually get to. So if we pull our fibs from point A to point B, a point of confluence would be the 38.2%. So we look at the 38.2%, it actually lines up with this previous high. So yeah, if I drag, let me just kind of make it a little more clear for you guys. So if we retrace, a great area for the S&P for you to actually look for buys would be this area right here at 38.2. We would look for a trigger entry, bullish engulfing candle, showing that there's a lot of volume coming back into the market on the bullish side. That's if this would be the top of this run, right? So if we start getting a retrace from this area, then yeah, we would look at the 38.2 right here for us to actually take enter, right? But the price could keep on rising, so we don't know. We'll look for a bearish engulfing candle, and then we'll see from there. But we don't actually have any signs of the price action reversing at the moment, so it's pretty strong. If I look on the 1 hour time frame, let me see what the 1 hour, yeah, so we still haven't, we've broken above this, and we have broken above here, so there's no real sign of weakness for the S&P 500. And what I want you guys to really consider, if we go to the macro indicators and we look at mortgage, the 30-year mortgage rate, guys, and I want to show you something very important. So right now, mortgage rates are coming down, right? It doesn't mean that it has reversed. We're at least waiting for it to go below 7.08 percent for us to say, hey, we might be heading down into a downtrend, and definitely we want to see it get under 6.03. This is just because we're having a pullback, right? So just because we're having a pullback doesn't mean mortgage rates are reversing. We haven't broken this low here, and more importantly, this low right here, right? So that's a very important low for us to get below. But for me to say, hey, we're seeing signs of weakness where the mortgage interest rate's going to keep coming down, I would at least need to see us break this low and then have a bearish retest, or just a push further down and a retest maybe here, bearish retest here or here, right? So, but what I really want you guys to consider is, let's look at the S&P 500, right? Let's pull it up, new price scale, and I just want you guys to really understand how correlated the interest rates are with buying assets. And this is because when the cost of borrowing goes down, when the cost of borrowing goes down, people want to invest. People will use margin to invest, right? So let's consider over here, right? Let's consider over here the COVID-19 crash. So this is the COVID-19 crash right here. And as we were crashing, interest rates were hitting their all-time low here in this green area. And while we were hitting the all-time low in interest rates, prices for everything started skyrocketing. So you guys really want to understand that you want to know this chart. You want to know the interest rate chart and kind of have your pulse on what's going on with the interest rates, because the news is never going to tell you the truth. But if you understand these charts, you can have an edge over investing, whether it's property or whatever, right? Because had you have known, if we bring over the Let's bring over the real estate market here, XLRE. So real estate select sectors, so new price scale. You can see here as well, as interest rates were going down, real estate started going and moving up a lot, right? And look at what's happening right now. Interest rates are going down and the real estate sector is increasing. So this is a chart that you have to pay attention to, especially if you're investing, because if you're investing and you're not aware of these things, you're gonna get caught, right? And it's already emotionally taxing to invest, right? So if you have tools and things you can look at independent of anyone else, you can definitely dominate in any asset class, because it's more about protecting once you have something, right? So let's look at the real estate market right now. So right now, you know, we've had this downtrend. Currently now though, we've had this low, we've had this lower low, but we've broken above here. So the market is actually looking like we are in this uptrend now, right? So we've had a low, a higher low, and we've broken these highs. We're at a higher high now, right? So we're looking to see how the price action will start moving around this area here. So, you know, this is a big area of tension, support, and resistance. So you can see the price fluctuate a lot here. So let's see when we get to 37.15 what will happen. And I'm sure you can see that real estate, yes, it has come down, but the bottom, I believe, may be in, at least for residential real estate. You know, however, in Canada, the US is different than Canada. A lot of individuals are going to be refinancing the next 24 months, and many may not be able to afford the new refinance, so they may have to sell, right? So that is something that, you know, if you're in Canada, you want to take into consideration, right? So that's for the real estate market. We see that we've broken this downtrend and we are now starting to head up. So we've had, so like, let's so we're on this downtrend, guys. We had this area of price was being distributed, right? If that's what you would like to call it. Then we had this break of this area, right? So break of this support, and we made the first lower low. So this was the first sign of weakness here, and here was the first sign of weakness. So here was the first sign, having this retest and then coming down shows there's weakness in the price action, right? So we're heading lower, and then we're consolidating, right? So until we broke this high, the price is still in the downtrend. So though the price was consolidating, we were having higher lows, we had higher lows, and then we had a higher high in this consolidation. Until we break this high, we are still in a downtrend, right? So we move further down. Yeah, so we made another low, so we made a new low, right? And now we've made that new low. We've broken above this resistance area, the support area, which was resistance, and now the price action has an opportunity to now, you know, reverse and start heading up, right? So that's how you read the price action for the charts, guys, is that we made, so this right here is high to low, right? So high to low right here, right? So anything in between here doesn't matter as much, because here, let me yeah, so everything in between here is more noise, right? So if the price breaks above here, there's an opportunity for an uptrend. If the price breaks below here, there's more continuation for the downtrend, right? So that's how you read the price action, because you may get faked out thinking, okay, we're back in an uptrend, but because we've had this move from point A to point B, everything in between this move doesn't mean we're in an uptrend or downtrend. We're just in consolidation, right? So we broke down below here, so that was showing more weakness in the chart. But because interest rates got stalled and they're coming down, the real estate, stock market, everything is increasing. So we can see the price starting to turn around and the beginning of an uptrend. Same with if we look at Bitcoin here. So we look at Bitcoin again, guys. Over here, we were on this downtrend, right? So we were making lower lows, lower highs, and then we had this low here, high here, and then this low area here. Once we broke above, we had this test of the support area, which was resistance, and then we continued heading up, making higher highs and higher lows, right? So that's how you read the price action. But right now, guys, as interest rates, if they keep coming down, that will be a good sign for all asset classes. And you can see the VIX, so the volatility index, has broken this low here, and that's what we were looking at to see if we do break this low. There's not as much fear in the market anymore. A lot of individuals feel more comfortable because interest rates are going down. S&P 500 is above the 200-day moving average, so we can, we're looking to see where the S&P may retrace, so we can get a safe and protected entry, right? So entering the S&P right now, depending on your strategy, definitely something you can do, but at the same time, it has rallied 10%, right? So if you're DCAing, that's your strategy to DCA in, but looking for a place where the price will retrace is definitely something that we want to consider to get a good entry into the market if you're going to be trading on a week-to-week basis, right? So if we reverse from this point, if we start reversing, we print a bearish engulfing candle, we'll be looking here at 43.89 to maybe enter into the market, but we need to see some signs of retracement, right? So a bearish engulfing candle or some type of bearish engulfing variation, or some sort of weakness in the market for us. So for instance, we had this point of consolidation on the 1 hour time frame, and then when we broke this low right here, when we made this low and then came back up, this is a point where you enter a short on this bearish engulfing candle, because we see that there's this weakness in the price from this consolidation, right? And then the price continued to head further down. And then as we see over here, just like on the real estate chart, we have these lows being formed, and then we have this consolidation, price pushed further down, and then we broke above this area, right? So everything in the chart matters. Everything in the chart matters because this is on the 1 hour time frame. So if you're able to spot that, and even just this bullish engulfing variation right here, these candles right here, so you can see the price came down, and then we had this bullish engulfing candle breaking above here, is a sign that yes, the price is actually going to be supported and we're going to push further higher. So at least I would hold the trade until this green area. We didn't know it was going to just completely keep heading higher, but at least we can hold to this area, right? So that's really all for today, guys. I am in a gold trade that I was holding from Friday, so we could take a look at it. I've closed half my position. I just closed half my position. So we entered. Let me go on the 15-minute time frame. Yeah, so we entered, on this pullback. We had this pullback of the price, and then we entered right here. And if we zoom in, we were in this uptrend. So I drew my fibs from point A to B. So let me just, on the 1 hour time frame. So we had our Fibonacci's from point A to B. So point A being right down here, and then B being all the way up here. B being all the way up here. So we pulled our fibs from point A to B, and we saw that, okay, the price action came down on this fib level, broke above these supports, broke above this support, and so I was just looking for an entry. So we had this push up above, and once we came back to this area, and I also do have fibs that I drew from point A to B here as well. Once we came back down, I was just looking for an entry point and a safe place to put my stop loss, because you need to give the trade some room to breathe, right? So yeah, so we've entered this trade, closed half the position about an hour ago. We've had this pullback, but tomorrow is the market. Tomorrow, there'll be more volume in the market. There's not that much volume right now, so if we keep heading higher, so we have We have this lows. We have a higher high from this area, from this consolidation area, right? So we have these lows, higher lows, higher lows, higher lows, broke above this consolidation area, this resistance area, made a higher high, and then we came back down here to test it and kept heading further up. So, you know, unless we break, and you know, my stop loss, I put my stop loss back to break even. Yeah, so my stop loss is actually now here at break even as I close half my position. But for the trade to be invalid, you know, we need to break underneath this area. But because I've took half of my position off, I put my stop loss at break even, because now it's a risk-free trade. I can let it ride for as long as I would like, right? So that's really it for today, guys. Keep learning, keep studying, keep enjoying the process. Things take time and they do not happen overnight. Every day is a new opportunity. Opportunities reset daily. I know the bull market is here, but at the same time, bull market and bear market doesn't matter. It's really the skill set and just the mindset, right? So keep pushing, keep understanding that everything that you want is here. If you envision it in your mind, it's here for you. But it may take you 2, 3, 4, 5, 10 years to get there, right? Because you need to master yourself and understand that this life is a process, and this world wants you to win. The world wants you to win, and everything that you may be experiencing in the market, whether you've lost most of your money, I mean, I've been there, whether mentally you just don't want to get up and see people, everyone's been there. These are all things that are happening for you to strengthen your psychology and your mental, so that when, you know, it's time for you to actually make that shift into being a profitable trader, you've learned all the lessons and you have more respect for the markets and for the capital that you have, and understand the most important capital is your mental capital. So anyways, guys, if there's anything you want me to review, please like, comment, share, and subscribe, and tune in next time for some more videos on cryptocurrencies, the market as a general, and I guess motivation as well. All right, take care.